So let's talk about some of the recent action, first of all, because we've had a lot of volatility. We had the so-called crash in Bitcoin, a mini crash in Bitcoin, but more so in a lot of the other crypto coins a couple of weeks ago. What does that tell us about kind of where we are in the crypto cycle?
Yes, well, of course, 2025 had been and still has been a fairly positive year to date. But that episode on the 10th, Friday the 10th, last week, shone a light, I think, on some of the challenging, maybe concerning dynamics in the space, and particularly with respect to the amount of leverage that's out there. If you look at the sort of offshore futures trading market, the open interest in that is less than 2% of the total value of Bitcoin, but it represents 70% or more of the trading volume. And so what you have is this tiny slice of the market that actually trades a significant majority of it with much higher frequency and in a much more speculative kind of volatile way. And that creates a lot of confusion for investors when you have these whipsaws that don't seem to make sense from a fundamental perspective.
Does it a lot of it is in the coins that are not Bitcoin, but does it have a feedback loop to Bitcoin itself also?
It does. I think over time, as you see this market mature, you're going to see a decoupling of the way Bitcoin trades from the way most of the rest of crypto trades, because Bitcoin really is in a category of its own as this sort of prospective digital gold, as a global scarce, non-sovereign emerging monetary alternative. That's very different from what the rest of crypto is, which is more of a technology bet on blockchain innovation and adoption. And there's lots of exciting things going on there, but it's important for investors to remember that the vast majority of crypto assets by number are totally worthless, right? And so there's a bunch of exciting projects there. Bitcoin clearly is an important asset. We think Ethereum, there's a handful of others, but investors have to be really careful trading sort of the long tail of assets, particularly trading them with leverage. And you saw that in the flash crash of last Friday. A lot of investors got burned.
Robbie, this is a really interesting point, but I think that there are still a substantial number of people buying these coins who see it as a lottery ticket, right? Because Bitcoin is over $100,000 now. The people who made the lottery already did it, right? Unless you think it's going to $1 million, which definitely there are people out there who do, but nonetheless, it's a tougher lottery ticket. All of these small coins, sure, they may go to zero, but they could go to the moon, right? And so that's sort of the promise for some individual investors for this kind of thing. If they know that that's the risk they're taking, does that make sense to you as a reason to get into some of those?
Well, I think it is concerning. And if you think about the magnitude of leverage that's being used here on some of these offshore levered futures platforms, it could be 100x leverage, right? I don't think anybody should be trading Dogecoin 100x levered, right? And so when you saw that flash crash of last Friday, 19 billion in liquidations. It's an extraordinary number. And we're talking about liquidations, you're auto-liquidated, your position value goes to zero, right? And so every time that happens, a lot of people get hurt, it adds volatility to the market, and so it's one of the things that confounds some of the more long-term, patient, institutional type investors, because they look at a price reaction, say in Bitcoin, to a small piece of economic or political news that has very loose connection to it, if any, and see a relatively strong short-term move, and it causes them to scratch their head. Okay, how do I think about this in a portfolio? How do I think about trading behavior and correlation? Now, the good news is, at least in something like Bitcoin, over any medium or long-term horizon, it tends to shake that off. Like I said, less than 2% of all the Bitcoin held is represented in those futures contracts, even though they make up such a significant percentage of short-term trading volume. So over time, the more sophisticated sort of long-term buy and hold type investing activity takes over and predominates, but not with that short-term noise.
When you talk about leverage, I got to ask you about crypto treasuries too, because not only are we seeing more and more companies put Bitcoin and other crypto on their balance sheets, many of them are using leverage of one kind or another, whether it's levering up their balance sheet to do it or some of the other strategies. Is that also a point of concern?
Well, obviously there's been a lot of interest over the summer in this new digital asset treasury construct. That interest seems to be fading a little bit in some pockets. So you've seen some of these multiples to NAV that were very high come, and meaningfully retreat. So we'll see what happens there, because of course a lot of the business model is reliant on being able to trade at a premium to the net asset value. And if that no longer is the case, it's difficult to keep growing. So we'll see how that plays out.
I mean, do you think that that is a good thing or a bad thing for the ecosystem? I keep thinking about Long Island. Was it Long Island iced tea? Like
right.
the
original
in the last cycle where everybody
Sure.
was like slapping crypto names
Right.
on their companies, even
Right.
though they had nothing to do with it. Now you see companies that have nothing to do with crypto buying it on their balance sheets.
Yeah, well, I think that it's not having a ton of impact on the market anymore. Sort of the peak of that activity was certainly over the summer, and it's faded, but it goes back to that point. Blockchain's exciting, digital assets are exciting, crypto's exciting, but people have to remember the vast majority of crypto assets by number will be worthless, right? And so people have to be very careful and discerning in terms of where they're placing their bets, how they're trading, and certainly when it comes to using leverage.
So something else I want to ask you about is, this has been a big year for crypto, obviously. A lot of that has been driven by DC and the sort of sea change in regulatory attitude. That has driven at least some of the price action. So what now, in terms of, if that's been one of the big catalysts, is there another big catalyst that people should be watching for? Right.
Well, that process is only partway played out, right? So in July, the Genius Act was signed. That was the first priority to get stablecoin regulatory clarity. And I think that was a terrific milestone for the industry. And we certainly are very excited about the opportunity for stablecoins in all kinds of applications, going beyond where they're used today, which is primarily in the crypto trading and DeFi ecosystem, but actually to be adopted in cross-border payments, both retail and corporate multinational, to be adopted potentially in financial market transactions, settlement, collateral, et cetera. So that's exciting, and that's now on its way. The second key piece is the Clarity Act, which is about crypto market structure. And that is still something that is sort of brewing in the legislative process, and we'll see what course that takes. In the meantime, there's lots of sort of rulemaking going on at these regulatory agencies to try to start to put frameworks around this space. It's a lot harder than it sounds, right? And so there's a lot of complex issues and questions that arise with this technology in ways that we hadn't seen before in traditional securities markets, because it's 24/7, digital, global, interoperable, all those things. And so that's going to play out, frankly, over multiple years.
But you're pretty confident it's going to get done?
There's a lot of positive momentum, and it's become, frankly, a lot of bipartisan support, too.
Robbie, good to see you. Thanks
Great
so
to
much
see
for
you.
coming in. Appreciate it.